Welcome everyone. Hi and welcome for today's information session. For those that don't know me, I'm Brian Thompson and with me today is another partner of the firm, Joe Seckel.
G'day.
Thanks, Joe. To put some context around the webinar, what we're looking to do is provide an outline of the different support packages that have been announced by the various departments such as the federal government, state government, ATO, State Revenue Office, Centrelink, a raft of different departments. We don't want to bombard everybody with numerous constant emails as there is already enough information overload going on. Rather, we thought the best way to reach out to as many of our clients as quickly as possible is via a webinar, so we can provide as much relevant content to our clients as possible that we can utilise to help us through this challenge. So thank you for joining us today, and we hope you find it of value as we want to be able to support you, our clients, and others as much as we can. So before we kick off today, just a couple of quick housekeeping matters. Hopefully you've already received a handout via the webinar, the reminder that came earlier today. So those handouts will have more lengthier details than what our slides do that we're looking at today. So please refer to that. There'll also be links on those as well. There's also a chat box to the right-hand side of your screens. So you can enter questions in there during the presentation that we will get to answer towards the end of the presentation. And also thank you to everybody that has already given us some questions. We will answer those at the end as well. You can also minimize that chat box. We recommend you do that during the course of the webinar, as well as if you're seeing very large pictures of Joe and I, minimize that as well. That'll allow the screen to maximize so you can see the most of what we can see there. So we'll also be sending out a recording of the presentation after the event. So obviously this is a very challenging time for everyone and for all of us in business. There's a world of uncertainty and confusion that threatens our livelihoods and that of the people we employ. It's unprecedented and we have no rule book to follow on this one that steps out everything in a nice, easy format. So our advice is to remain calm and bring it all back to the basics. Control what we do have control over and leave the hysteria to the media. Gather and seek out the information that is going to help you and seek assistance where required and take action where required. We're in the middle of a health crisis as well as a financial crisis, and we have to manage both. That is really important. So I'll let you know what we have done here at PTP. Just like you, we're a business and we're facing the same challenges. We are not immune, so I'm sharing what we have done to give you an insight into the steps we've taken. So what does it look like for us? We have most of our team working from home with a skeleton staff in our offices on a rotation system. We've got one person in each of our Cobram and Melbourne offices and 3 to 4 at any one time in our SHEP office, but all separated into, I suppose, define and contain areas because our Shepparton office allows that. Everyone is still contactable and working away as best as possible. We have adapted to the circumstances as best as possible for our business in order to keep functioning at a high level. We prepared and have prepared on the basis of going into full lockdown at some point. Now, that's not to say that we're expecting that to happen, but we've prepared for it on that basis. We thought that was important for a number of reasons. Firstly, if you don't do that careful planning based on a worst case outcome, then when we are not as prepared as we could be, and our ability to operate would be severely diminished, which is a very detrimental effect on our business and also our team's capacity to stay employed. So we have done everything under our control to overcome those obstacles and to make sure that we can continue to assist you to the best of our ability. And we're pretty confident in our plans for that. So what does that mean for you? Well, it is really important to stay calm and focus on the things that we have control over. Seek information to help you with your decisions. Now more than ever, it is critical to know your numbers and what your cash flow is doing. If you haven't sat down and started crunching some budgets and forecasts, then you may not be as well informed as you could to make decisions quickly and decisively. What does that look like? Well, for example, would be knowing what your cash flow would look like with reduced minimal staff, those sorts of things. Everyone's business is different and will require different decision-making processes for which way they turn. So if you haven't started, I strongly urge you to start crunching these numbers. If you don't know where to start or how to do that, then reach out to us. That's what we're here for, to provide assistance. As I mentioned, everyone's business is different and we're all going to have to adapt in one way or another to maximise our ability to pull through to the other end. Some businesses out there will in fact thrive through this situation. Unfortunately, others may not. That's the sad truth. Either way, it is critical to plan some more. Fear and anxiety will only cloud our judgment in this process. We need to stay calm and control what we have control over. So gather the data, obtain relevant information in order to make as informed decision as possible. So let's move forward and start running through the measures that have been introduced. Just be mindful that this is an evolving situation with new measures being introduced almost daily. So as the list grows, it's important to keep ourselves abreast of what can work for us. So Joe, you might kick off with the state measures.
Thanks, Brian. As Brian mentioned, this is changing daily, if not a couple of times a day, depending on the day, and it will be updated as we go through. But what we've done here is tried to put together as best as we can a list of the key ones that we think are going to affect business owners. And as Brian said, we're going to step through now the state measures for Victoria and New South Wales. That's where most of our clients operate. There's some information in the handouts around other states if that's applicable to you. And then we'll step through the banks and then move into the federal stuff. There's a lot of information here. So I think one of the other things that we mentioned is that there's a lot more information in the handout. So look, feel free to take notes, but given the amount of information, if you just listen, get your questions down. Don't stress too much about taking too many notes. We're happy to answer questions and go through more detail after this. In fact, we'd appreciate the opportunity to do that. So moving on to Victoria, beginning there, the key thing for the states, in fact, all the states, is really around their payroll tax. That's the key measure. So in Victoria, we're removing payroll tax liability for any businesses that are paying less than $3 million in assessable wages. So basically what that means is that if you have paid any payroll tax on the way through this year and your wages are less than 3 million, you will get a refund of the payroll tax that you've already paid, and you will not be required to pay payroll tax through until the end of the financial year. So that will be, and the benefit of that will vary depending on obviously the amount of payroll tax that you pay, but that can be quite significant. It is quite a significant liability for a lot of businesses. So those same businesses will be able to defer payroll tax for that first quarter next year. And again, keeping in mind the amounts or the changes here, that may increase further. We'll just have to keep an eye on that. But at this stage, you will be able to defer that to later on to, again, help with that cash flow burden. For the hospitality businesses here, liquor license fees for 2020 will be waived. If you've already paid those, they'll be refunded. If you haven't paid them, there won't be any liability to pay. And also land tax for landowners. And again, this is a measure directed at businesses, obviously with non-residential property, can be deferred until after 31 December. So they're not removing that at this stage, but they are allowing deferment to help with cash flow and the payment around that. So it's Victoria. Moving on to New South Wales. Again, similar around the payroll tax. Theirs is a little bit different. It works out about the same amount if you do the numbers. Businesses with total Australian wages of less than 10 million will have their annual tax liability reduced by 25%. It has a similar, as I said, a similar effect and impact financial-wise as the Victorian one. It's just focusing on the whole of Australian wages as opposed to just New South Wales wages. We should stress we have some businesses that are on the board that operate in both New South Wales and Victoria, and for that matter, both in South Australia and Victoria. If you're operating in different states, there'll be some different rules around that. But I think that the measure will ensure that most small businesses have very little or no payroll tax to pay this year. So the tax-free threshold for New South Wales wages for the payroll tax, that's going to increase from 900,000 to 1 million from 1 July 2020. That had already been slated to increase from 900 to 950, but they've increased that to $1 million again from 1 July 2020. So essentially that means that you can pay more wages and not get into that payroll tax range and not have to pay it. So I think I did some rough crunching on that. Both of those measures will save businesses in those that are affected, that are in that range of the 3 million in Victoria or 10 million Australia-wide for New South Wales, in the range of, depending on the wages you're paying, from $1 up to about $110,000, $120,000 right up at the top end. So fairly significant savings there on that front. So that probably handles the state ones. As I said, the other states and information around those and links to them are in the handout. So please, if that affects you, please go and have a look at that. Again, a lot of them are around payroll tax. So that's the key measure. Before I get into the banks, they're all fairly similar as far as what they're doing. I suppose our key message would be, in what Brian was saying earlier, our key message would be that you just talk to your bank or talk to your finance professional, whoever that might be, because they are willing to help people, and they are trying to act as quickly as possible. So yeah, look, we'll go through some details here around what they're trying to do, but broadly it's reducing interest rates, giving people and so the cost of money, giving people a bit of a holiday from their repayments to help with cash flow, making term deposits more attractive if people have cash to put them to be able to put that in, and really just providing access to more funds for small business. So in looking at this, NAB saying we're deferring 6 months, ability to defer 6 months on a range of business loans. That applies to mortgages as well, for the most part. We've got a 1% discount on variable rates for small business loans, 2% discount on overdrafts. So again, we're just reducing the cost of money here, pausing credit card repayments for up to 6 months, waiving terminal hire fees for businesses which most businesses do use EFTPOS facilities now, and increased rates for 12 months term deposits. That's a measure that's sort of getting lost at the moment a little bit, but that'll help our elderly community as well a little bit at the moment with people that have cash aside. That's been a detriment with the decreased interest rate. So that's a good measure there. Commonwealth Bank, again, similar there, deferring business loan repayments for 6 months, 1% interest rate reduction for cash-linked small business loans. Same with general business loans. Deferring repayments on vehicle and equipment, waiving early withdrawal fees on business term deposit accounts. That's another one I think that NAB most of them are doing. So that's an ability to get cash out if you need it. That includes fund management deposits, increased rates for 12 month term deposits. Again, they're all up around that 1.7, 1.75%. Again, ANZ, 6 month deferral on term loan payments, temporary overdraft increases for 12 months, a further 0.25 decrease in small business loan interest rates. Key one with ANZ is that they've actually, when we put this presentation together, they're one of the only ones that have actually reduced their variable rates as far as with the rate cut that's happened recently from the Reserve Bank. The other banks have reduced their fixed term interest rate costs, but not necessarily variable. ANZ have done that. And a 0.8% reduction to 2 and 3 year fixed rate loan facility, providing a secured facility at 2.59% up to 1 million. That's separate from the measure that the government's put in place around the 250,000 unsecured loan, which we'll cover off later. Westpac increase again, same up to 1.7%. 8 month term deposit offering 2% for older Australians. So again, we're making that more attractive for older Australians to put money into a term deposit. There's a little bit of surety of funds there for the banks. 2% reduction on overdraft rates, 1% reduction to interest rates on business loans, option to defer business loan repayments, credit card repayments, and waiving of early withdrawal fees. So they're all focused around very similar things, but again, the message is there. Get in touch with your bank. I'm sure most of you already have done that, but be in touch with them. Again, in the notes, that's the four majors. In the notes, I think we've got some notes there on Suncorp, Metway, Bendigo, Adelaide Bank, and Macquarie. But they've obviously people use other banks as well for their borrowing and banking requirements. We've tried to cover up as much as we can there. Most banks will be along the same lines as what we're seeing there. moving into the government stuff, federal government stuff. Brian, you want to start with this one?
Yep. So this probably brings us to one which anyone who is employing somebody in their business, whether you're a sole trader, company, whatever it be, this one is for everybody. So essentially eligible businesses that are under certain turnover tests, $50 million that were active at the 12th of March 2020, you're going to be eligible for a tax-free cash flow boost of between $20,000 and $100,000. So for those that are paying PAYG up to $50,000 over the course of this, I suppose this last 4-month period, you'll be eligible for the maximum of $50,000 in the first stage of the boosting cash flow, which then entitles you to an extra $50,000 after June. So it's broken down into 2 packages, one before 30th of June and one after. So whatever you're entitled to in the first part up to the 30th of June, you'll be entitled to after 30th of June. So even if you're employing people and you don't even have to withhold anything from their wages, then you will be entitled to a minimum of $10,000 in the first part and then another $10,000 in the second part. So there's nothing you need to do in order to, I suppose, apply for this one. It'll happen automatically as you lodge either your quarterly BASs or your monthly IASs as well, really starting in March and through to April, May, June. And as I said, depending on your entitlement in that period, you will actually be entitled to the exact same amount of money again, but that will happen throughout July, August, September, and October. Once again, via the lodgement of your BASs and IASs. So that's one that everybody who employs will be entitled to that one there. Did I miss anything on that one, Joe?
No, I think that covers that off. Yeah, and I think we're going to run through an example potentially now. Just if we've got it on the next slide, let's have a look here. Yeah, so sorry about the small writing again, guys, but do you want to run through that one, Brian, just to the example? This will be in the notes as well. There's other examples in the notes for people to have a look at, but this is how it applies practically.
Yep. So bear with us here, everyone. So Sarah's construction business, she owns and runs a building business in South Australia and employs 8 construction workers, on average full-time weekly earnings, who each earn $89,000 per year. In the months of March, April and June, Sarah reports withholding of $15,000 for her employees on each business activity statement. Under the government changes, Sarah's eligible to receive the boost on the lodgement of each of her BASs. So she receives a credit of $45,000 for the March period, which is 300% of her total withholdings. Then she will receive a credit of $4,900 in April period before she reaches the $50,000 cap. So that's that cap we talk about for the first part. Then in addition, after that, that's when she's essentially going to be able to receive the $50,000 again, but in equal installments that'll happen in the June period, July, August and September. Okay, so that probably have a read of that. There's some more examples in the notes as well, just to give you an idea of that. The timing gets a little bit tricky depending on whether you're on monthly or quarterly. But the big message I would really put out there is there's probably a lot of people that have already stopped employing people that were and have already maybe put some people off. Not sure what that looks like. I really urge you to probably reach out and contact us, your partner, whoever it is at PTP, so that we can really seek to maximise what those incentives could be for your business. If we can maximise the first one, the second one then gets paid according to the first one. So please reach out to us if you've got any queries about that one, or you've stopped employing people to see what it does with that payment. We can help put some numbers around that.
There's some questions that we've received prior to the webinar around this, so we'll answer those at the end. But just to clarify a couple of things here, that 300% number that we're talking about there at the top, which was a little bit confusing, I know, for me when I first read it as to why it's 300%. But it's basically the fact that she's had 3 months happen, and because she's lodging monthly, there's 3 of those, so it's 3 times that number. which is where they get that 300% from. If you're lodging on, obviously on a quarterly basis, that business wouldn't have paid anything up to that point in time until they lodge their March BAS. But lodging monthly, they've paid January, February, and they will pay March in this month coming. So that's where that comes from. The other thing to take notice of here is what that's done down the bottom, where it talks about what it did initially with the very first stimulus package versus what it's done now. So serious business would have received maximum payment of 25K under the first one. You can see there that under the second one, that's actually increased to 100,000. So a further 75 grand. So it's a I suppose I just want to mention that just to highlight the significance of the package and how much of a jump that was to provide to businesses. So it's a look at, so some businesses it's a bit of a drop in the ocean, but it's still fairly significant from the government.
Just before moving on to that next slide, just mention that the 100,000 or whatever the entitlement you have will actually reduce any of the GST payable, the PAYG, the other things that are on your BAS. But if you go into credit, it is their direction that they're looking to refund any credit back to you. But otherwise, it's really reducing the amount you would pay, which obviously leaves more funds in your bank, which is what the measure is designed to do, to help you continue on your operations as best as possible. Okay, next slide, Amy. One of the other initiatives was an increase in the instant asset write-offs. You're probably all aware of this one. We've been using this one for a couple of years. The threshold has changed a couple of times, but now they've changed it from 30,000 to 150,000 up to the 30th of June 2020. So it can be new equipment, it can be second-hand, just needs to be installed and ready for use prior to 30th of June. Had to have purchased it after the 12th of March though. So we can't use this measure for anything that was purchased earlier on in the year. It is only between that period of 12th of March to 30th of June. They've also increased the threshold of the businesses that can utilise this from 50 million to 500 million. And it's obviously designed to bring a lot more employers or businesses into the pool in order to try and boost spending across the region to keep the circle of money going. The next one is a little bit similar. It's backing business investment. This one moves into actually next financial year. And what it's designed to do is to once again spark spending into plant and equipment, those sorts of things, but it's designed around new equipment. So it's purchasing new equipment, and what it's going to give you is a deduction of 50% of the value of that piece of equipment that you purchased and have installed ready to use. And then the balance of the money is actually going to be able to be depreciated according to normal rules. So an example here might be, because there's no limit on the purchase of the equipment, there might be a $500,000 piece of machinery that is purchased. You'll be able to claim the first 250,000 of that immediately, and the remaining 250 will then be subject to whatever depreciation rules that you use. So that provides some really good tax incentives for businesses, but obviously for those that are in the space where we have cash or can get access to funding to purchase equipment going forward.
Definitely. I think just a bit of a distinction there. It talks about new assets as well. And specifically, as it says, does not apply to second-hand Division 40 assets or buildings capital works. So there's a few things to be worked through here, and again, we'll provide updates as they come through. But again, it's really just designed, as Brian said earlier, to keep cash moving, keep people investing in assets as they can, and to provide tax relief.
The other one the federal government have done is increase the accelerated income support. So this one really reverts to, I suppose, Centrelink and the ability to apply for Centrelink allowances that were there. So anticipating that there is going to be a significant amount of the workforce probably let go, stood down for some period of time, and it's allowing them to access job seeker payments, youth allowance, those sorts of things to, I suppose, not have to follow the normal rules to get there, to be eligible to get those payments. What it's then doing is actually also paying an extra $550 per fortnight to all people that are currently on those payments, but anyone that joins. So if generally you were going to be paid $500 per fortnight if you're on JobSeeker, this extra amount on top of that takes you to over $1,000 per fortnight. So that's, once again, there to assist those people that are already on the state system, but anybody else that is put off, giving them access to go in this and keep some income coming into the family to meet all the expenses, rent, loan repayments, whatever that be. It's a pretty lengthy one, this one, and there's more information in the actual the notes, but a lot of the eligibility requirements have been toned down to make it easier, such as possibly requiring separation certificates from employers, proof of identity, different things like that. They're all able to be applied for online, and hopefully their MyGov have to go through the MyGov website, which has been crashing a fair bit over the past few days, but hopefully they start to get that under control, which makes it a lot easier to go and do it, versus there's many people standing in queues, obviously, at Centrelink offices trying to get in for this one as well.
Just one other thing to be mindful of with this, Brian, which I was only reading this morning, which I hadn't considered, is that you only need to be, in order to get that coronavirus supplement, $550 per fortnight, you only need to be eligible for $1 of one of those other payments. So, you just need to be eligible for, just eligible for JobSeeker. Obviously, that's income tested. So if you're only getting a reduced amount of that, you only need to just be eligible for it to be able to get the $550. So you may not get the full amount, but you will certainly be able to get some if you're able to get one of those payments.
Yep. And I don't think that one's been tested either, Joe. So as I said, there's more information in the notes further on. Worthwhile reading, especially if there are, I suppose, team members or employees that you might be letting go out of your business and standing them down. That's a direction you could be pushing them towards, because there's entitlements there for them.
Great. So moving on to this next one, which I'll cover off. So this is the $250,000 unsecured loan that's been put out there. So essentially, this is a very fluid one because it involves the government and also the lenders, so the four major banks and some other banks that are eligible lenders. But basically, what they're saying is, look, the government's put in place the ability to secure or a guarantee of 50% of a loan, which will encourage the banks to lend more freely to small business, and they've been given that directive. So in order to be eligible at all for this, you've got to have a turnover of less than $50 million. Your maximum loan is $250,000 per borrower. The term of up to 3 years with an initial 6 month repayment holiday, and it's unsecured. So obviously that means no asset having to be provided as security for the loan. And the whole 50% guarantee from the government, I suppose, underpins that and gives the banks confidence that if they're unable to be paid, that the government's at least covering half of that. So other measures around this that aren't on there that are in the handout, basically to say that, look, the government's removed some measures that are put in place that around responsible banking rules. So obviously the banks will still assess an application as normal, but they've taken out some of the red tape within the application process within the bank to enable it to go through quicker. They've also, the Reserve Bank has obviously also reduced interest rates outside of its cycle, and it's also put in place a pool of money that the banks are able to access at a lower rate. So 0.25% is the cost of money to the bank. And the purpose of that and the directive is to lend that to small business. So they're able to borrow it and then on-lend it. And that purpose of that being so cheap is obviously that the government's encouraging the banks to pass that on to small business owners at a lower rate than what they would otherwise, just to assist with A, getting some money into businesses, but B, the cost of that money as well. So things to be mindful of here. Is that the banks, it is going to be run by the banks, this scheme, or this particular benefit. So it's going to require people to go through the same application process you normally would for a loan is what we're seeing at the moment. So it's not just a matter of click a button and you're eligible. It's going to take some time, unfortunately, because it's got to get through banks, and banks are building this as they go a little bit. So it's a bit of a moving target. There is the availability there. Again, it comes back to just if you've done your cash flows and you know what's going to be required, and you're going to require this money, which a lot of businesses will require a level of funding at this stage. Talk to your bank. Talk to your bank and say, okay, well, let's get the conversation going. What do you need from me? And start the process as early as you possibly can. The other thing with it is it's term up to 3 years at this stage. So yeah, it's not a long-term loan. It's a shorter-term period. So that it says it's about a 6 months repayment holiday. There's then been talk about a 6 month interest-only period as well, following on from that. But there will be obviously a need for that to be paid back or refinanced, probably given the current guidelines at this point in time. So it's a short-term measure to help businesses through that. I think that's about all on that one. Brian, did I miss anything on that?
No, I think you've got that one. Yep, all good.
Okay. Cool. Early super.
Yep, one of the other incentives is early superannuation release. Once again, the writing's pretty small there, but what this is putting out there is the ability to get $10,000 back out of your super prior to the 1st of July 2020, then also be able to access a further $10,000 in July. So, and maybe for 3 months after that. So it's really, I suppose, looking at the hardship rules and the ability to get money out of your superannuation. There is eligibility criteria, and we'll go through some of that now. But once again, the notes, the handouts will give further details. But the money coming out is actually tax-free as well. So it's not as going to get taxed or go into your tax returns or anything like that. So to apply for the early release of super, you've got to satisfy one or more of the following requirements. You're unemployed. You're eligible to receive a job seeker payment, youth allowance, parenting payment, one of those other things from Centrelink. On or after the 1st of January 2020, you were made redundant. Your working hours were reduced by 20% or more. And if you're a sole trader, your business was suspended or there has been a reduction in your turnover of 20% or more. So those are the things that if you can pass those tests and you require cash, then superannuation is one of the ones that you can look for to do that. You don't have to apply for both. If you're eligible for it, you could be just for looking at one. You don't have to apply for 10,000 either. It's just if you're eligible, it's up for grabs there to help bring some money out that might help you with whatever your circumstances are to get through. They do go on to talk about that even if you turn around and don't require that money, feel free to contribute it back into the superannuation scheme itself. What's next on that one?
Sorry, sleep at the wheel.
The other thing, this may not apply to lots, but within self-managed super funds, the pension rates have halved. So the rate of pension you need to take out each year, there's a minimum that goes, there's a range of it. There's a table in the notes, but depending on your age, depends on how much has to come out of your self-managed super fund for pension purposes, or other super fund for that matter if you're on a pension. What it's designed to do here is not deplete people's superannuation funds at a time where the investments and so forth in those funds have been really smashed within our current environment. The investments have gone down, and they don't want to have to force people into selling investments, shares, bonds, managed investments, whatever they be, in order to pay these pensions out. So at this stage, they've turned around and halved those rates for not only this financial year, but at this stage, next financial year as well. And this is a measure that is very similar to what they brought in when we had the GFC a decade ago. So that is a good one for a lot of people that had pensions happening within their self-managed super fund, or even another retail fund for that matter. Relief for financially distressed businesses is something else that's come out. Now, this applies more for those that run through a company structure. It essentially is giving a little bit of extra time for the, I suppose, the technical aspects of being able to take somebody and through to a liquidation process or through to a bankruptcy process, where there might have been a few weeks' notice needed to be given. Now there's up to 6 months' notice that needs to be given. If there was $2,000 that was outstanding that you're trying to issue statutory demands for, that's now up to $20,000. Once again, there's more information on this one in the notes. Hopefully no one's needing to go down this pathway, but it's certainly something that's out there to help stop other business owners pushing a lot of people to the wall through a difficult time like this, so that we can give our give our businesses a better chance of coming through the other side. It also relaxes the the solvency trading rules, so that the directors can't be held liable for a certain period of time for actually turning around and being caught, I suppose, trading whilst insolvent. So that's a good thing to help take the pressure off, to make sure we give the businesses every possible chance of getting out the other end. Next one, Joe. There's assistance for affected regions. Now, this one probably even came out after the bushfire side of things. So they've set aside an initial $1 billion allocation. We don't have very many more details on this one, but it's there to really try and give extra money back into those with severely affected industries or communities. To start with, there's going to be $1 billion available, but they haven't discussed really much more about that at this stage, but more just putting it out there that they do have more reserves ready to turn around and help really severely affected regions. Fair work guidelines. Now, there's been a lot of talk around this, obviously, as to when employees can be stood down without pay. It starts getting fairly technical into this side of things. Once again, our notes provide more information, but what we're really looking to do is, obviously, in the unknown of our businesses, is how can we, what are the things that are available to do us as far as with our employees or teams if we get shut down, locked down, or our business suffers downturns. So employees stood down without pay. This one really relies upon that if there is a stoppage of work, then employees can be stood down. That stoppage really normally needs to be outside the employer's control and that they're not responsible for. So if the government turn around and put us into lockdown and all non-essential services means you can't work, you've got to go home, and your employees are unable to work from home, then technically they can be stood down without pay at that point in time. It's not something that a lot of businesses go down that track. They will normally work with their employees and possibly look to give them access to their annual leave and pay them on that basis, or also unpaid leave as such. So one of the things of if your employees, if you do take the instance of standing them down, they're still accruing annual leave and all their other entitlements at the same time. Fairly technical area, and if you're moving into this space where you're needing to reduce your teams and your employees, or you've got to stop altogether, do implore you to reach out and have a chat to us. There's links to the Fair Work Guidelines to give you a bit of information to have a read, try and get your heads around that. But the main thing to take note of this is we do have control back at employer level again to make quick, early, decisive decisions to conserve cash, to maximise that viability of your business to get through the challenges that do lay ahead. One for you, Joe.
Yeah, so this one will be applicable to some businesses that have apprentices. Again, this is an example in the notes, so I won't go through an example, but it's basically to say that the apprentice wage will be subsidised for a period of time up to a certain level. Talking about there up to a maximum of $21,000. So it's probably more just, again, the encouragement there is to subsidise some of the wage to retain those apprentices if we possibly can. There's a bit of uncertainty around that as far as, again, just details with when you can. They're talking mid-April, but who you can apply to, how you apply to them, who's going to. It's likely the ATO will manage that, but again, details will come out in the future if that's applicable to you, and you've got apprentices or trainees, and you want to talk about it. Please reach out, have a chat, and we'll provide details as we go through. ATO support, we're already seeing this a little bit now over the past week or so, talking to the ATO on behalf of clients. They are certainly, they have an internal directive to be supportive of businesses and of taxpayers. They keep saying that on the phone when you're talking to them. So they're certainly more than happy to support people that don't want to be sending businesses under due to tax debt at this stage. Or at any stage, obviously, but they don't want to be right now is most important for them to be supportive of that. So deferrals of 6 months for payment of amounts. So moving to different reporting cycles, varying of instalment amounts, so prepaying tax, varying them down when you're able to do that, remitting any interest and penalties that have been applied. So basically just being generally supportive and minimising any cost associated with tax compliance. So again, if we're running into trouble with that, the best policy is to get in touch with us or the ATO directly, or in conjunction with us, and we can support you through that, because it will happen. It will certainly happen over the next little while. It's more than likely to impact all of us in some way or another.
Just on that one, Joe, just before we move forward, just make note there that super contributions for your employees, that still has to continue. So the ATO don't necessarily have control over the super guarantee scheme. So really important you still meet those obligations, because there won't be any concessions available for that. But as far as all the rest of the concessions, anything that was due to be paid after the 23rd of January this year, they're eligible to be deferred by these up to 6 months. And so that's really important. And also anybody that had an existing payment plan in place, then that is also going to be eligible for a deferral of some kind. So once again, we get to work with the ATO. They're being very supportive in that space, which is really great, because that just helps ease cash flow burdens moving forward at this stage.
So our policy would be on that is, as I said, is to they'll assess. They'll have a general view of supporting businesses, obviously, but they'll assess each business on its individual situation. So talking to them, and as Brian said, if we have payment arrangements in place already or any of those sort of things, we talk to them and they'll give us the options. They have been doing that over the last week or so. When we contact them, they will say, here's what we could potentially look to do for the taxpayer. So they will give us their priority. They're not waiting for us to necessarily ask for something, that they're offering assistance proactively. So that's really good. All right, moving into the Q&A. As Brian said, we got a number of questions prior to the start of the webinar, which we'll step through now. We'll start with those ones if we can, and then we've had a few people ask some questions on the way through as well. Thank you to those people as well. Really appreciate that. So just starting with Brennan's question there, is there anything available to sole traders through the government packages? There is, but unfortunately, to a degree, sole traders have fallen through the cracks a little bit with this stimulus. The cash flow boost is linked largely to employment of staff and withholding tax. Some sole traders employ staff, but there's a hell of a lot of sole traders that are just literally sole traders. So it's just them, and you're unable to pay yourself a wage when you're a sole trader. So it's if it's just you, you're ineligible for those cash flow boosts at this point in time. Where they're directing people in that regard is to the job seeker payment, so to the Centrelink assistance. You've also got the option, as you've gone through, of the superannuation early withdrawal. The other thing I'd say about this is just keep an eye on it over the next little while. There has been a lot of talk in the media about sole traders and the fact that they have missed out on this. So there may be some measures that have changed there. But as it stands at the moment, unfortunately, there's not as great a benefit from the cash flow boost as other structures in that space. Brian, have you got anything to add to that, or is that?
No, I agree with that, Joe. It's really, sole traders probably only coming back to the eligibility for Centrelink and to be able to get onto that really quickly.
Cool. Kate, thanks for your question. I'm in the travel industry and our industry has ground to a halt. I have no income, but I do have assets. What are my choices? So again, without knowing your absolute circumstances, I suppose that the question around the assets there is that one of the things with the job seeker payment and the Centrelink payments is that they have removed assets testing. So that will help with that side of it, with the cash. But depending on what structure you're in and what you're going to do, you may be eligible for some of those other things that we've spoken about. So again, just get in touch with us about that. Good to have cash at the moment. If your assets include cash is king, always king, pretty well, but really good position to have some cash if that's the case. So yeah, get in touch and we'll go into more detail with you. Gary, thanks for your question. Will businesses receive any actual cash, or is it I'm assuming that means to remain in the tax portal? Again, Brian covered off on that a little bit before, but the intention, I think, is that from the ATO is firstly to reduce ATO liabilities, and then secondly to provide, if there's any credits, refunds to businesses, because the purpose of this is to help with cash flow. So if you don't have, if it remains just as a credit with the ATO, that will help at some stage in the future, but probably not quickly enough. We're still yet to get, and I think there's a question down later on as well, yet to get to how that will work. They're a little bit, again, we're sort of creating this as we go a little bit, so they're a little bit unsure as to when the payment's going to happen, how that's going to happen. If you've got other debt, even or payment arrangements, will you be eligible to get a credit back, or will that be offset against that? We don't definitely know the answer to that. What they typically do is apply it to other debt, but again, the measure here is to increase cash flow. And if they're talking about deferring payment arrangements and helping cash flow in that regard, you'd think potentially some of that may come back to the business if they've got even if they've got a payment arrangement in place or other debt. But it's a little bit of a wait and see, Gary, on that one. So apologies for not being able to get a absolute definite answer, but the intention is, I think the overall intention is to provide cash flow back to businesses. So that will be, their measures will be around that.
But just with that one, Joe, also if those businesses are paying payroll tax, they will receive that refunded back into their account. So that one's a definite, but obviously you need to have been paying payroll tax for that one to come about.
Yes, yeah. Brian, there's one here about lower my. So Jerry, is there a way I can lower my business wages liability while still keeping my core team together? If you can answer that one just briefly, just based on what you spoke about earlier with Fair Work and with what we're doing in our business as well.
Yeah, look, it's a tricky one. The situation would give us some more information to work with, but you are able to obviously stand people down. It's matching it with what your workforce needs. So it's not just about what today is, but if you're communicating with your team and talking to your team and bringing them into what the bigger picture looks like, it's all about making sure you can have a business longer term into the future. So generally, the team will be able to turn around and help you come up with a plan. And that might mean that some people will need to stand down without pay or take annual leave, those sorts of things, because there is a core team you need. But you certainly don't want to be, I suppose, taking too many people on a journey if your business is not going to be able to survive that, because you won't have any core team left at that point at all. But you're certainly able to, I suppose, separate and keep a core team and keep them on board.
Yeah, and the only thing I'd add to that is, Jerry, is that there's the ability always to talk to your team and potentially reduce hours, change their role, doing what they're doing. But the best way to do that is to do it in conjunction with them, so that you know what they're looking for as well. But yeah, absolutely understand the commercial reality of trying to retain really good people. If you've got a great core team of people, that's the real one of the real challenges with this is, we've got to try and retain those people. We don't want them back out in the market and going somewhere else. We want to keep them in our business. So I think the key one is just communicate with them, talk to them. We're doing that with ourselves, with our business, and with clients' businesses as well, with teams. So more than happy to help with that conversation. Just reach out, but just keep talking. Another one here from Melissa: is there any business assistance available from government or sole traders due to downturning cash? I think we answered that one before, Melissa. Unfortunately, not as much as other structures, but there is some there. Sue, how do we claim government assistance for staff? If they are terminated, are we not eligible for any payments, holidays paid or non-paid? So I'm assuming there, how do we claim government assistance for staff? Hopefully some of what we've gone through has answered that. Obviously, you'll be able to claim for the business the bits on there from their withholding tax. For the staff themselves, obviously they'll have to apply to Centrelink if they're going to go for a job seeker payment, depending on what their situation is. If they're terminated, are we not eligible for any payments? Again, that payment for the cash flow boost is based on withholding tax and wages paid. So if you are not paying the wages and you haven't not withholding the tax, obviously you're going to get less back because you're not paying it in the first place. But as far as if they're terminated, are you still eligible? Yes, you are. It's really just based on what you've withheld and been paid and received for the cash flow boost for the March and June quarters. So yeah, it's and then the holes paid, non-paid. I'm not sure what that refers to. Maybe, yeah. Obviously, you've got the opportunity, the ability to offer your staff annual leave if they've got it there. Things like long service leave as well, and you have got the ability to offer them leave without pay. They're all options depending on what fits your business and your requirements. Anthony's got a question here about what grants are available to small business in order to keep staff employed. I think we've probably covered off all those in the presentation. Anthony, if there's anything unclear about what we've discussed, or you want us to talk about something specific, please touch base. More than happy to talk about that.
Sorry, Joe, just with Sue's question there, I'd urge Sue to probably reach out and contact us to talk further about what strategy might be available for her there, because those holidays paid, if that's still being paid, it will actually be wages. So there is different effects that could happen in those BASs, which do change that assistance. So without knowing further detail, we can't really explain how that would work. So I'd urge Sue to reach out and talk to somebody here.
Definitely. The other one, which I had a quick question from a client about this yesterday, holidays paid versus unpaid. It will, depending on what your staff choose to do, it will potentially affect their ability potentially to get some job seeker stuff as well. So just be mindful of that. That they'll obviously have to deal with that themselves. But just as Brian said, reach out and we'll work through that with you, Sue. Look at this. Lou Pert has asked a question. Is the 150,000 claim on the depreciation including or excluding GST? This is always a question we get. That's excluding GST, same as the 30,000. So in effect, you can go up to. It used to be able to go up to 33,000 because it's it's exclusive of GST. So in this case, in this scenario, you had your 15,000 on. It's up to 165. Will be the value of the GST inclusive value to purchase an asset up to, assuming that that's got all GST in there. But yeah, that 150 is excluding GST. Thanks for the question, Luke. Question here from Rob. Thanks, Rob. Hey guys, you obviously service a vast variety of businesses. We create a support network. There it is. There. Look at that. Where we put together our ideas and harness the strengths. I agree, Rob. I think it would be a powerful thing. I think we've had discussions about this internally. We are talking about continuing, and part of the feedback will be around this, is that we are talking about continuing to do these sessions on an ongoing basis. So they may turn more from the start as an information session, obviously, whilst more information is coming out. But our intention is that we are acting as a support network for our clients and for the business community in general. So, yeah, absolutely would be keen to, if people are happy to do so and would look to do so, but would be keen to continue to run these for as long as we need to. Look, for that matter, I think once we get through this process and through the crisis itself and out the other side, hopefully we've created a network of people that we can continue to work together after that as well. Hope that answers your question.
Yep,
sorry, Ryan.
I was just going to say, we were also talking internally about maybe creating a Facebook group or community so that we can, I suppose, be a little bit more timely and interactive on answering questions and seeing that collectively. So once again, when it comes to feedback time, people might be able to put their hands up and say, yeah, that would be a worthwhile thing for us to do.
So please, the feedback that we send out, I know it's a bit of, we've tried to keep it as simple as possible, so we're not having to answer hundreds of questions, but please provide us feedback and tell us what you want to see, because we're more than happy to provide what you're looking for here, because as I said, our focus is supporting our clients and the business community. Brian, do you want to answer this one? So if a business had not employed anyone before, only started employing in March quarter, will the 10,000 apply given they weren't listed by the ATO as an active employer before the 12th of March?
The technical answer to that one would be no, you won't be entitled. But given those circumstances, I would be contacting the ATO to discuss, because the last thing they would be looking out of any of these packages is to actually try and shut down a business or take away livelihood purely because of a date like that. So if that's actually occurring, and that's probably more of a startup growing, that is exactly the sort of thing they're looking to try and continue to support. So certainly wouldn't be able to happen automatically, but it'd be a phone call to turn around and explain the circumstances and then go from there.
Great. Jeanette's got a question here. Thanks, Jeanette. Will we, as business owners who don't pay ourselves a wage, be able to claim Centrelink? My view, I'll give you my view, and Brian can then add anything if he likes. It will. I'm going to sit on the fence here and say it will depend on your circumstances. Depends on what structure you're in, what your business performance is going to be. But potentially, if you haven't got any other income coming from your business, then yes, you're eligible to claim Centrelink, depending on your situation. So the answer there, I think, is get in touch and we'll get some details and give you an answer individually. Anything to add there, Brian?
No, I agree with that one. If you're a sole trader and your income's dropped by that 20%, as we were talking about before, then you're eligible. You start to pass some of the eligibility tests to get some things from Centrelink. So I would certainly not err on the side of not wanting to claim. I would be putting it in and trying to make sure that you get what you're entitled to.
Great. Sharon, re-ATO. Thanks, Sharon. What will happen to the PAYG refund if you have a payment plan in place for the ATO? I think we answered that one before. The answer is we're not 100% sure right at the moment, but we'll just have to wait and see and work with the ATO to see what happens with that. Again, the intention for these measures is to increase cash flow in business, to keep staff on and to keep businesses trading. So you'd like to, I would like to think, and I think we'd all like to think that potentially the ATO would provide a refund and allow you to continue to pay your payment arrangement as you were. That would be the ideal, but let's wait and see what happens in practice.
Yep.
Right. Actually, I might answer this one, Rob, because this is one that I did the slide on. So regarding the SME government incentive guarantee scheme, when do you need to take this up by? Is there a window in which you need to commit, or is it any time within 3 years? We might get back to you on that, Rob, but from memory, I think it's just to the 30th of September 2020 that you'll be eligible for that. But again, that date may move, and I'll confirm that. We'll confirm that for you, and we might just put a note out about that. Is there any update on commercial leases from Jamie? Thanks for your question, Jamie. Brian and I were just talking about this an hour before the webinar because I think ScoMo had a bit of a mention of it a couple of nights ago when he did his presentation to the country on the ABC. We haven't heard anything yet, is the short answer. Brian, is that basically where we got to?
Yeah, that's correct, Joe. We thought we were going to hear something from them last night. That's what he was inferring would happen. But to this date, no answer. But I would suggest we shouldn't be too far away, because there's a lot of nervousness, not only on commercial leases, but private residential leases right across the board. So that's a big package that needs to be addressed to help calm people down.
So, Jamie, in answer to that, we'll keep an eye out. That will be a big one, definitely. Just conscious of time, guys. We've just clicked over the hour. We'll keep answering some of these questions, as many as we can. We've only got a couple left, so if you need to pop off, that's fine. We will get a recording of this afterwards, but we'll keep answering them for the moment. Debbie has a question here about the instant asset write-off of up to $150,000. Does it include the purchase of a motor vehicle? Yes, motor vehicle will be included, Debbie. The only thing I'd say there is that motor vehicles have special rules that I'm assuming are going to apply in this scenario as well, around cost limits and depreciation limits. So depending on the type of motor vehicle and what it is, potentially not all of that may be claimable or depreciable in the first year or at all. So yeah, maybe just touch base with us about that before you go and do anything on buying a vehicle. Anything further on that, Brian?
No, that covered that one, Joe. That's right.
Owen, are the discounts banks offering on finance facilities being automatically applied, or do you need to ask for the discount? Good question. I think largely they're being automatically applied at differing dates. For some reason, the 4th of April kept coming up when I was reading about this over the last few days. It must be a reset period for interest rates or something for the banks. But I would touch base with them anyway. Owen, in answer to your question, I think it's good practice to ring them and just check on that, just to make sure. It's just a phone call, and that will increase your chances of that happening quicker, and definitely make sure it's applied to your finance facility. Anything further on that, Brian?
No, that's right, Joe. All good with that one.
Cool.
And then another question there from Debbie: is the PAYG refund applicable to long service leave payments? Yes, it will be. It's anything that basically constitutes wages at the end of the day, and any group tax that's withheld as a result of that will fall into the boost package that the government have given. So, yes, in short.
Excellent. Thank you very much, everyone, for your questions. Thanks for those who have hung around. Thank you very much for hanging around. Really appreciate it. Amy's just put a note there in the chat just around our feedback survey, and any feedback that you've got would be much appreciated. And she's also said that a link to the form will also be sent out after the session to download a copy of it. To be able to get back to us. So great question from Rob. We are looking to keep doing these. Please let us know if you want a particular topic covered, or if you want the format of it, or however you want it to work. We'll take that all on board. But we're more than happy to keep talking to people. In fact, we want to keep talking to people. Thank you very much for your time. Ryan, is there anything else it's probably just that last one.
Yep. No, it's probably just, if there's further questions, please, I urge you to contact us, because that way we can delve, I suppose, into your very specific circumstances, which means we can really hone in and get the right answers. So if there's things you're thinking you may or may not have been entitled to, please reach out to your contact here at PTP just to get some clarity around your strategy going forward. But aside from that, I would be urging everyone to please stay safe and make sure we keep that health side of the crisis right at top of mind as well. And let's do everything that we can control under the financial side of things.
Great. One more thank you before we finish up, to those that are still here. Amy, our marketing person internally who organised all this stuff. Thank you very much for organising it, because Brian and I were fine with the content, but as far as the getting a webinar together and running all that, that's been very useful. So thank you, and thanks on behalf of the clients and people who attended as well. Really appreciate it. I think that's it.
That's it. Have a great rest of the day, everybody, and reach out if need be. Take care.
See ya.